Hi everybody, this is Ospreyeye from MyChartCoach.com, and we're going to take a look at the stocks in the marijuana sector that trade over the counter, the OTC cannabis sector stocks. In the last video, we showed you some of the big board stocks. The majority of the companies in the sector actually trade over the counter. And so I'm going to go really quickly. I have quite a few I'm going to show you, and I'm just going to do fast analysis. First, I want to do MJNA. They are medical marijuana, and they are this weekly chart here shows what's going on. The rest of the charts are going to be daily charts, but this chart is a weekly chart, and each candle represents 1 week of trading. Notice how this has been on this really strong pullback since the first week of the start of the new year, and the candles broke the middle Bollinger Band 2 weeks ago with the close below, and then now you have a weekly close below the 200-week moving average, and then notice the lower wick here. There's a bounce off the 300-week moving average, and so this is the key support level to hold. It should be able to hold between 10 and 11 here. If it fails to, that's going to signal more big downside risk, and you could see a drop down of the 50-week moving average at 0.082. What bulls want to see is they want to see a bounce off this level and then a weekly close back above the middle Bollinger Band at 13.8. That would signal that MJNA is recovering from what could be the start of a new downtrend here. Okay, let's look at CBIS. CBIS had a nice move on Thursday of last week. As you could see here, there was these 6 red candles in a row, and then on Thursday there was this really nice bounce after it closed below the 50-day simple moving average. This is a daily chart. That's the green line there, and then and it had formed this bullish reversal pattern here. And on Friday it tried to confirm the pattern. Notice a black candle did form, so the pattern has not yet been confirmed, but the share price did break above the previous close. So what we're looking for now is a white candle to form. We want to see this 50-day simple moving average hold at 0.092. If it breaks below that, that's going to signal more downside risk. Bulls want to see, there was a close above EMA4. You want to see that hold and then a run back up to the middle Bollinger Band. Notice there's a small gap between these two candles here. You could see a break if it closes above EMA8 and run up to fill this gap up to the middle Bollinger Band. It will need to turn the middle Bollinger Band into support to start a new uptrend. Okay, let's look at CNAB. Okay, CNAB, actually, this is United Cannabis. Okay, you've got RSI in the bull zone. You have a bull cross on Fasto, and then this is actually holding the middle Bollinger Band. Okay, the middle Bollinger Band is this dotted purple line, which is also the 20-day simple moving average. Notice how there's this nice uptrend. This is the green ascending support line and the red ascending resistance line. Notice you've got higher highs and higher lows. So this is a really nice strong uptrend. Bulls, you just want to see this middle Bollinger Band at 173 hold. As long as that keeps holding, and then notice here there was a close on Friday above EMA's 4, 8, and 13. That should be the bull signal. Notice how there was resistance before. That sets up a potential run back up to this upper Bollinger Band at 225. So yeah, really nice seeing the middle Bollinger Band hold here. If it does break below, you could see a drop down to this ascending support line and the 50-day simple moving average at 156. Okay, let's look at CANN. This is General Cannabis. Okay, it's had this bullish crossover on Friday. Notice it's at oversold levels. It's below 20. So this is extreme oversold levels. You notice there's this real big pullback below the middle Bollinger Band with the gap down. Many of these cannabis stocks had a gap down on the session news or White House news, and so comments, I should say, coming out of the White House created a gap down on a lot of these charts, and so now they're trying to recover. For CANN, the whole key is going to be this EMA4, the pink line. If you can get a close above that, it might come up and fill this gap and make a run back up to the middle Bollinger Band. The middle Bollinger Band right now is lined up with the top of the gap. Okay, so keep an eye on CANN. If you look here, MACD is pinched on the 8, 13, and 5. A bullish crossover would be a signal that the chart is heating up. Okay, here's MNTR. They provide financing to the cannabis sector. Notice how it held here on the RSI held 50. So bulls want to see it stay above 50. You're at oversold levels on Fasto. So bulls want to see a cross above the 20 line. Okay, the share price pulled back. It had this really strong uptrend, had this nasty red candle here, and then once again another gap down. And so it pulled all the way back down to the middle Bollinger Band. It closed below the middle Bollinger Band on Thursday, and then Friday it bounced, but still closed below the middle Bollinger Band. It needs to get above that breakout level and the EMAs to run back up here and fill this gap. If the middle Bollinger Band turns into resistance, then you're talking about a drop down to the 50-day simple moving average. Okay, let's look at GBLX. This is a stock that had been on this really nice uptrend. It was slow moving. You know, we were on it back here in December when this candle formed right here with the break above the middle Bollinger Band. You know, it's taken a while to get moving, but you know, it's been holding this middle Bollinger Band the whole time. And then once again, you had this big drop back here towards the end of February with the big gap down, and then now it's finding support down here in the 50 and 100-day simple moving average support zone. The 50-day simple moving average is the gold line, the green line is the 50-day simple moving average, the gold line is the 100-day simple moving average. What bulls want to see is a break back above the middle Bollinger Band and these EMAs, a close above EMA 8 and EMA 13 should be the bull signal that it's going to run back up and possibly fill the gap. Notice this is the bottom of the gap down here, and this is the top of the gap. And so the gap started filling. Okay, it came up to here, but it's still unfilled between this line and this line. So a lot of times you will see these upward gaps fill on a bounce. Okay, notice the declining volume pattern. Okay, a declining volume pattern is what you want to see on a pullback, because what it's showing is the sellers are tiring. Notice how this was the lowest volume day, but until you go all the way back here the day before the run started. So a lot of times what you'll see is when stock is holding support and volume has declined, that the sellers is tired and all you need is buyers. So what we're looking for now is a bullish volume spike to break this pattern with a push above resistance. Okay, let's look at FFRMF. Okay, these guys have had news recently. They're still bullish here on RSI, still in the bull zone above 50 and below 70. Okay, Fasto closed below 20, so it's at oversold levels now. This is another stock that came down and corrected. It had a gap down, but notice how the wicks here on the upper wick on this candle and lower wick on this candle have filled the gap. So there's not unfinished business on this chart, but it did have the gap down as well. It came down and look where it held support, right here at the middle Bollinger Band. That is the key level to hold. If it breaks below 32, you know, this 33, 32.5 zone, currently let's see, the middle Bollinger Band is at 0.332. If it breaks below that, then you could see a big drop down to the 50-day simple moving average at 27. If the middle Bollinger Band holds, then 33 will be the load zone for the push higher. And what we like to see when the middle Bollinger Band holds, and then there has to be a break above the EMAs. When you get above a break above, then that sets up a potential run back to the upper Bollinger Band. And for all these stocks, when they run back up to the upper Bollinger Band, what you like to see if they can bust through it is break above the recent high close. And for this stock, this is on the 21st of February. So that would be, you know, if you can break out above that, then it could push higher, and then ultimately the target's going to be up here on the top of this candle up here at 75. We just want to see this the middle Bollinger Band hold and the uptrend continue. Here's TRTC. Okay, this is a name a lot of people are familiar with in the marijuana sector. They've been around for a long time. Okay, you want to keep your eye on Fasto and RSI. You want to see both of those break above 50. Okay, this is another gap down. Check out how it was doing well. It was bullish, and then the bad news came out, and look how it sold off. And then when it broke below the middle Bollinger Band, when you see a break below, that's your signal that if you didn't sell up here, that you want to be out, because it's signaling more downside risk and a potential downtrend starting. And then you had this big gap down, okay, and then now it's finding support. You had a close above EMA 4, that's your bull signal, and now there's a close above EMA 8. So this has got a really nice bounce down here off the bottom. What it needs to do now is break the bottom of the gap. This is the bottom of the gap level. If it can break above that, you could see it run to the top of the gap and up to the middle Bollinger Band. Okay, so those are the targets. If it can break 28, there's a good chance it can run back up here to the 29 to 30 range. Okay, it's got to, in order to start a new uptrend, it's going to have to get back above the middle Bollinger Band. Let's look at CGRW. Okay, this is you know, below 50 on both Fasto and RSI. It has, you know, this pullback as well. Look at the multiple red candles, and then you have this really long hammer, and look how long the wick is. And then so you got this long lower wick on this candle. Okay, so the long lower wick, and then you got a volume spike, and what that shows is loading. There was loading off this 200-day simple moving average zone. That's the red line here, and then notice there was follow through the next day. So a bullish reversal pattern formed this day. That, you know, this would be bullish harami plus a bullish hammer. You've got a hammer down here at the bottom. bottom, and then you've got the follow through with a white candle. So the bullish reversal pattern has been confirmed, the bullish Harami, and then now what it needs to do is it needs to get back above this resistance zone. If it can break above the 100-day simple moving average at 178, then it could get a new uptrend going. If all these levels, these simple moving averages turn into resistance, then you're looking at a downtrend and a potential drop down to the 200-day simple moving average. Okay, let's look at Rocky Mountain High Brands, Colorado marijuana company. It's pulled back here into the it's holding 50 on RSI. You don't want to see it drop below like it did here on Fasto, because that's just signaling the chart is cooling down. You know, it had this nice day on the first day of March. It formed this candle, a nice white candle up to 14, but then it pulled back, and then there was a close below the middle Bollinger Band here on Friday. The dotted purple line is the middle Bollinger Band. We really wanted to see that hold. Now you're looking at a potential test of the support of the bottom of this channel. Notice that RMHB has formed this sideways channel, okay, and so like 14 zone is the top, and then down here in the 10 zone is the bottom. So it hit the top and it pulled back, and then now what you want to see is a bounce off of 10. It would be very more bullish if it held 11 and then it pushed higher. That would signal this new uptrend is starting. You know, if the middle Bollinger Band turns into resistance again, you could see a drop down to 9 and the 50-day simple moving average. There was a P-star bull flip. What we want to see is a break above 14 and then the high close here on the 23rd of January. That's going to be the big level to break. If it can get above that, then it could break out higher. So this has been winding tight with this sideways trend. It just needs to stay bullish. If you look at MACD, it almost had a bullish crossover on the 12, 26, and 9, but it failed to with the pullback. So you want to see the MACD line, which is the black line, cross above the blue line to the upside. That will signal more upside potential. There was a crossover on the 8, 13, and 5, but notice it's pinched and set up for a bearish crossover. Bears do not want to see, or bulls do not want to see a bearish crossover. Let's look at Mountain High Acquisition Corporation. This is MYHI. This was a huge winner. You know, we were on it back here in the single pennies, and it ran all the way up to 90 cents. You know, it pulled all the way back down to the 50-day simple moving average. What it bounced, and it bounced off that level, but then it failed to break EMA 13, and it pulled back below the 50-day simple moving average, and it held the previous support level from the second week of February. But now, you know, once again, it repeated the pattern of hitting the 50-day simple moving average, the EMA 13. Notice how it's been failing to break EMA 13, and it pulled back. So now you've got a retest of this support line here, the horizontal support line, or it needs to break above resistance. It's at a crucial level right here. It needs to get above the 50-day simple moving average in the middle Bollinger Band at 0.358. If it could do that, it could start a new uptrend. If you see a close below this green line, that's going to signal more downside risk, putting the 100-day simple moving average on deck. There could be a huge drop if the 100-day simple moving average broke. So this is really crucial for the stock to get some bullish momentum and close back above the middle Bollinger Band and get a new uptrend going. If you notice, there's a declining volume pattern. Look at the volume on Friday. If you go all the way back, you have to go back to the very start of the last big run right here in December to see when volume was this light. So it's showing the sellers have tired, but it needs buyers to step in. You know, if you look at this candle right here, these candles, and you come down here, you will see there's some volume. It looks like some people were trying to buy at the bottom here. They just need to be able to push through resistance. MACD 8, 13, and 5 is showing you the chart is heating up. Okay, let's look at OWCP. This is a stock we've been following. You know, it had formed this gap right here, and we were afraid of it getting filled when this upper wick formed in this candle, and that's exactly what happened. Okay, on this candle here, on the first day of March, the gap filled, and now it's pulled all the way back down to the middle Bollinger Band. There was a bounce off the top of the gap. We want to see that level hold. If it can hold, then and the middle Bollinger Band holds, then it should bounce and run back up to the top of the upper Bollinger Band. If it breaks the middle Bollinger Band, you could see this gap fill and a drop down to the 50-day simple moving average. So this is a crucial level for it to bounce. And notice the lower wick on Friday's candle that does show loading, along with this big volume spike. So it looks to us like the traders were loading off this level for a potential bounce. So if the middle Bollinger Band holds, you could see a reversal pattern form on Monday. Here's CNBX, another big winner that pulled back. It ran all the way up to above $7, hit like $7.75, and and then now it's pulled all the way back down to this middle Bollinger Band zone. It's holding this support level right here from these previous candles from this high close. But what's really important is this middle Bollinger Band at 269. It's got 3 red candles in a row. It should form a bullish reversal pattern off off that level and bounce. If the middle Bollinger Band breaks and turns into resistance, then you're looking at a potential huge drop down to the 50-day simple moving average at 151. You could be looking at a 50% cut in the share price. So it's very, very important that it holds support here and forms a reversal pattern. Okay, let's look at KSHB. Okay, this stock here has been another downtrend stock. It did close above 50 on Fasto. Notice how this downtrend, these guys make the bottles that people put the cannabis in, so they're supplying a very good service for the industry without having to produce marijuana or be involved with the marijuana itself. So this is Kush bottles, but as you can see, they've been in this nasty downtrend. They tried to break above the middle Bollinger Band right here, but that didn't work, and it kept pulling back. Now you've got a close here above EMA4, the pink line, so it's heating back up. It's going to need to get above the middle Bollinger Band and this 200-day simple moving average of 237, a break above 237, and then the chart could really heat back up, and you could be talking about a run back up to the 50-day simple moving average. If it keeps failing to break the EMA's resistance, the pink line is EMA4, the lime line is EMA8, and the orange line is EMA13. If it keeps staying below those levels, then that will signal more downside risk. Once again, look at the really light volume, and you want to see a bullish crossover on MACD. Okay, let's look at a couple more real quick. GRNH, another nasty downtrend. It is hitting the 200-day simple moving average support zone at 0.072. So we're thinking this could possibly bounce off this level. It was prior, support back here, and so it needs to get once again above EMA4. A close above EMA4 will be the signal that the chart is heating up. And then SRNA, this is just like the last chart, the last couple, where you've got this nasty downtrend. The candles are below EMA's 4 and 8. It closed above EMA 8 here. It's trying to heat up. If it can get above the middle Bollinger Band and the 50-day simple moving average, it could heat back up. And then here's the very last chart is AXIM. Okay, this was a stock that ran all the way up here to above $20, and we were on this when it was much cheaper, and now it's pulled all the way back. It broke the middle Bollinger Band over here, and then it broke the 50-day simple moving average right here, and then now it's come all the way down to the 100-day simple moving average. So we're thinking it should bounce down here off the 100-day simple moving average at 794, this $8 range right here. So look for a bounce off of 8. It needs to close above EMA4, and the real crucial level on this chart is the 50-day simple moving average at 1116. It needs to get above that level to get a new uptrend going. So look for a technical bounce off the 100-day simple moving average for AXIM. All right, there you go. There's some quite a few plays over-the-counter marijuana sector plays. This will get you prepared for next week, give you some stocks to have on your radar for potential bounces, and we'll try to see if the sector can recover. Lots of news out over the weekend. I suggest you could check out our editorial page on our website, and we'll be having lots of current marijuana news on there as well. Okay, thank you very much. Check us out at mychartcoach.com or YouTube channel at mychartcoach.com. Thank you.
Wait.